Hi, good day. Welcome back to session 3 of or part 3 of our discussion on introduction to accounting. So if you are new to this channel, if you haven't covered the part 1 and part 2 of this section, the links are in the description of this video. Make sure you go through them and proceed from here for better understanding. So this is going to be the last part of or the final part of the introduction to financial or accounting generally. We are going to look out for a brief idea about financial statements. Financial statement generally. So when we say financial statement, in a simple language, financial statement has to do with the formal records of what the financial activities of the business. We're talking about the formal records of the financial activities of the business or firm or entity or person over a period of time. And financial statements are prepared within a 12-month calendar. When I say 12-month calendar, I mean what? Yearly. Financial statements are prepared on yearly what? Basis. Yearly basis. So that is what? Financial statement. And when it comes to financial statement, we have 5 financial statements that every business prepared, that every regulated business is prepared. Let me make that emphasis clear. Every regulated business is prepared. Regulated businesses or companies prepare. So these are the 5 financial statements that's been prepared by businesses. So we have what? The income statement. We have the income statement. Right? We have the income statement. The income statement 2. We have the statement of financial position. Statement of financial position. This is what we call the balance sheet. Okay, the OG term. Then we have what? Statement of changes in equity. Statement of changes in equity. We'll talk about that. Changes in equity. Then we have what we call cash flow statement. Cash flow. We have cash flow. The name should tell you something about a cash flow statement. And then lastly, we have what we call the note. The note to the account or the note to the above statement. The note to the account. These are accounts at the same time statements. So we have income statement, statement of financial position, statement of changes in equity, cash flow statement, and then note to the accounts. All right, so when we say income statement, what is an income statement? So income statement in the brief, this is where we want to know the performance of the entity. We want to know the performance, how they performed, the profit that they made for the period. That is what we need to know when it comes to income statement. So here, it is prepared for us to know the performance of the entity over a period of time. When we talk about statement of financial position, or we refer to statement of financial position, also called the balance sheet, the BS. Balance sheet, okay, here, it helps us to know the current status of what? The firm. We want to know the position that they stand. Here, we want to know the position of the entity, their strength. We want to know their strength as at now. We want to know their position as at now. So here, in a better definition form, you say that statement of financial position help us to know this. It tells us the snapshots like a picture, just one time. Second, it gives us what? A snapshot of the entity's position as at what? Now. This is what we call what? The statement of what? The financial position. And we talk about statement of changes in equity. Here, it is a statement we prepare to account for what? Investors what? Money. Here, it is, a statement we prepare to know the interest, to know the capital, to know the any other additional capital that we introduce on board, any profit that they obtain, dividends here and there. All these things come to the statements of changes in equity, right? So here, it has to do with what? The changes in the initial capital of for the business. So let's say we started with the initial capital of, let's say, 100,000 Ghana cedis, and at the end of the day, we are having the same capital as what? I mean, let's say 120,000 Ghana cedis. That means that initially we began with what? 100,000, but now we are having what? 120. The difference of 20,000 is what we call what? That should be reflected in what? The statement of changes in equity. So that means that the initial capital has changed over time by what? 20,000. And such change is supposed to reflect in the statement of changes in equity. That's what we call statement of changes in equity. And we have the cash flow state. So the cash flow statement tells out the inflow and outflow of cash and its equivalent, right? We want to know the cash that has come in, the cash that has gone out, and even any cash representation like check. Check can be a cash equivalent, right? Promise note can also be a cash word equivalent. We want to know these things and the balance that exists in the cash flow statement. So we prepare that to determine that. And the note to account give a detailed and an accurate explanation to the above what statements here. It give us tell us why were we getting profit. You go to the notes to the account, you read how they were able to get the profit of so and so to be found in the notes to the account. How were they getting this figure as their position as at now? Check the notes to the account, you see it. So these are the things that records give an explanation to the statement above that you're supposed to know. And when it comes to financial statement preparation that you can see here, every financial statement have something that makes it easy for us to prepare. So for financial statement, we have 5 elements of financial statement. We have 5 elements of what? Financial statement. And what are they? We have 5 elements of financial statement. The 5 elements of financial statement are: 1, we have what? Assets. Just a brief. We have assets, we have liability, we have equity, we have revenue or income, and we have what? Expenses. So these are the 5 elements of the financial statement. Financial statement cannot be prepared without these elements. So all the financial statement that you see supposed to capture these what elements in there. It's like a feature of the financial statement. We have assets, liability, equity, revenue or income, and expenses. Let me just give you a brief knowledge about these because we will discuss them proper in the conceptual framework in our next presentation. So when we say assets, per layman understanding, assets are something that you own, that you use in running what your business or your personal what activity. That's a layman understanding. But for in accounting definition or in accountancy, in a professional definition, we say that assets are resources controlled by an entity. Assets are supposed to be controlled by an entity. When we get to the concept of accounting, you understand that we have a concept called what? Business entity concept, which says that when it comes to running of the business, we have 2 parties at work here. We have the owners and we have management. We have the owners and we have what? Management. There are 2 people who run the business, management and then owners. Owners give out their resources for certain group of people called management to manage it and then run it in order to yield what? The profit, right? So in that scenario, that means that in that scenario, the management controls the asset that you the owner, that you brought into the business. You don't control it, but its usage is being controlled by management. Business entity concept. We'll discuss some of these things going forward, but for now, just a brief idea about what an asset is in a professional definition. We say that assets are resources controlled by what? An entity, right? To generate what? Future economic benefit. To generate future economic benefit. Even that is not enough, but just a brief understanding. Then liability, in a layman's understanding, you may say the liability is something that you own, right? When you own somebody, is what a liability. That is a layman understanding. But in a professional context, liability has to do with what? An obligation arising from the past, which results to the settlement of what? Any future economic benefit out from the entity to the one that the business owns. That is what we call liability. As I said, in layman understanding, you say something that you own, something that you need to settle in future. But when it comes to professional definition, liability tells us what? The present obligation arising from the past, the settlement of it is going to result in future, economic benefits are from the entity, something like that, and we are good to go. We'll discuss some of these better in conceptual. So, but just for now, just for a brief understanding, you're supposed to know that. And we say equity, equity is an interest that you earn after we taking all our liabilities from what? Assets. Whatever we get at the end of the day becomes what? The equity. Residual interest after we deducting liability from assets. What is revenue or income? Revenue or income is also very simple. In a layman understanding, we see that revenue or income has to do with the the sales that we made for a particular period of time, right? Sales that we made for the particular period of time. And then for expenses, someone will say that is the cost you incur in running what? A business. Just for a layman understanding. But we have a professional definition as I used to define some of these things, but we'll discuss them proper in the conceptual framework accounts. Okay, so these are the elements that are supposed to be featured in every financial statement that you see. Without these, you can't prepare the financial statement, and you're supposed to know the detail of this, and we'll discuss them better in our next section. So once we have this element coming to town, that means that it forms the basis of the preparation of the financial statement. We have been talking about financial statement, financial statement. Remember, everything that we have in our life has its own advantage and disadvantage. So it's good that financial statement is supposed to prepare so that we'll know how far the business is doing, the position, the cash flow here and there. But in our early part of our discussion, or the beginning part of our discussion, we made the fact that accounting information records or trace or captures information that has what? Economic value, monetary what? Value, monetary value, and doesn't record any other transaction without a monetary what? Character. Right? So if that is what we made mention in the early beginning part, that means that then there is what? A limitation here when it comes to what? The financial statement or the accounting information. One aspect has to do with where that's not what captured in its records the vital aspects, the vital information which lack financial character. For example, the skill set of management, the stewardship of what? Employees. These things lack financial character. That doesn't have any monetary value. Here, financial statement will not record that, and that becomes a limitation to what? The financial statement. And two, there are some of the treatment that we engage when we start with the calculation aspect. You get to understand that how we treat some of the transactions, it differs. For example, how we account for what we call stocks. When we say stocks, these are the goods that the business sells to its what? Customers. We have a lot of ways that we can use to account for stocks. Somebody may, or some firm may account it using what we call the LIFO method, which is not accepted currently, right? Others may count using the first in, first out method, right? Others may count using the simple average method or the weighted average method. So here, different methods are used, thereby resulting in making comparison difficult. Because if firm A is using first in, first out, and then firm B is using, simple average method in accounting for stock, that means that here, for us to compare, it becomes difficult. So comparison becomes difficult because of different methods adopted by different accountants or different firms. And then also, it does not provide detailed analysis of the transaction. It does not provide detailed analysis. Based on the financial statement that you can see, when you take a typical look of financials, you can clearly see that it is just a summary of everything that we have done. It doesn't have a detail of things that you're supposed to know. So if you are not, well versed in, business and accounting field, it becomes so difficult for you to understand. So that is one of also the limitation of the accounting information. And then lastly, it does not disclose the present value of the business. Since we made mention of this, that all the financial statements that we prepare, they are based on historical information, past information, previous information, and cannot disclose the present condition or the present value of a business. And this is one of the limitations of the accounting or the information or the financial statement. So one, it does ignore vital information like financial character. Two, It permits alternative treatments which make what? Comparison difficult. Three, it does not provide detailed analysis of transaction. And fourth, it cannot estimate the present value of the business, since all the information that we use to prepare the financial statement are based on past what information. And these are some of the limitations of the accounting information on the financial statement that you're supposed to understand. And lastly, what are the careers in accounting? I will leave this for you to drop it in the comments section. Based on what we have discussed, what do you think will be some of the careers in accounting information? Drop your answers. If you are watching me on Facebook, you drop your answers in the chat section. If you are watching me on YouTube, in the comment section, drop your answers. Give me or state three careers of accounting information, or state three careers of accounting. After going through the study of the discipline of accounting, what are some of the careers that you can get to know? So this is what will end our presentation or introduction to accounting. So in our next session, we'll look out for conceptual framework. Thank you so much for watching this video. If you have really learned something from this video, do well to like, share, subscribe, so that we can always mentor a community of students, learners, entrepreneurs who are ready to aim for success and achieving their overall goal, becoming the perfect version for themselves. So thank you for watching. I'll see you in the section. Bye.